Hello, welcome back. As we are right now in the summer season, we're looking at a lot of stocks that have been completely annihilated in the past, now getting a little bit of a gain. And in the last month, Alibaba is actually up about 40%. And you may not have even noticed that it's been a little bit silent. There have been some down days as well, as you'll see here in this 1 month chart. At some point back in May 24, the stock was 81 over here, was its lowest. If we take a look at the 6 month here, we will see a picture of a company which had its stock price near 180 or so, and then it started dropping precipitously, and at some point reached the very low levels near 80. I think it actually went even below 80 at some point, yeah. But right now it seems to be doing a little bit better, and we have talked about this potential concept and this thing happening because things seem to be getting a little bit more positive for Alibaba every day. And now, of course, this is going to be a long run, and we may and will probably still some negative days. But overall, it looks like we're having an upwards trajectory here. And we have talked about the financials of the company. What I kind of wanted to take a look at is see what's going on in terms of stock news. Now, if you take a look at our stock news module here, you can kind of see, and this is what I like to see a lot in this kind of module, is the change in sentiment. Like you will see here that all of a sudden, previously, we were talking for the most part about Chinese stocks being a menace, being a threat, being dangerous, people shouldn't be holding them and things of that sort. You would see all sorts of articles. But right now, you are looking at articles talking about Alibaba as one of the best retirement stocks here, why they're surging, and two fresh ideas from JP Morgan with up to 60% upside potential. So it's, as you can see, a very clear shift in sentiment here, which I like to see. Now, I wanted to examine some things here, some of these articles, because there are some interesting news to talk about. And to start off, this is an interesting one. Here's why Chinese stocks, Alibaba, Baidu, JD rose this week. And you will see here that the main reason for this one is the fact that the China's Ministry of Finance is entertaining the idea of giving local governments the opportunity to sell special bonds. And if this idea comes to fruition, it would mean that the governments will sell about 220 billion of special bonds in the second half of the year, aimed at propping up the Chinese economy. Very interesting to see, and this is one of the reasons why the whole Chinese market was propelled upwards, it looks like. As you'll see, the company that actually got the most gain was Bilibili here, and a lot of the other Chinese stocks followed through. Now, another interesting thing here, price target increased to 205 by analysts at Benchmark. Now we are looking at price increases at analyst target price increases overall, and you will see here another one by Benchmark from 200 to 205. Doesn't look substantial, of course, but again, this points to the sentiment, points to the fact that it seems to be shifting a little bit. Now, we have seen Citigroup, for example, reducing the target price, for instance, from 176 to 172, and set a buy rating for the company in a research note on Tuesday. Now, you will see, of course, a lot of different analysts giving different price targets, but what we do want to examine is the overall action. Like we want to be seeing from from massive selling targets to a little bit of a hold and then maybe a potential buy. Overall, getting a little bit of an of an increase in terms of activity for a buy, or at least a hold, which seems to be the case really here lately. Again, kind of pointing to a potential shift in sentiment. Not super important, of course, but it's something that is interesting to at least track. Now, another interesting thing here, which you will see, Alibaba Earnings turnaround hopes revived after shares rise 60%. And what you will see here, that the biggest brokerages have reiterated their bullish calls for Alibaba, suggesting more gains may be in store after the e-commerce giant surged from a mid-March low. So this takes you back to mid-March here, where the stock was actually really destroyed. And Alibaba profit seemed better than expected here, as you'll see, on cost-cutting effort. So Of course, this is going to be a long run, and the consensus estimate is generally speaking positive. And this is again something that we want to be taking from this article. Now, interesting to see the company's revenue for the March quarter beat analyst projections thanks to cost control measures and growth in new business opportunities here. Of course, investors remain cautious about the Chinese economy, this mass testing, COVID-0 policy, and this nonsense of that sort, which is definitely dragging down the Chinese economy for now. Now, you will see here this article, which basically mentions the thing that we talked about, the 220 billion stimulus, which is for the most part bonds, pretty much. It's not directly like pretty much free money. But what you will see here is that it gives you a little bit of a breakdown on what happened with the stocks. Like Baidu gained 3.5, Chinese ADRs, Pinduoduo rose, JD, KC here, Bilibili is what we talked about. And also on Wednesday, investment firm UBS raised its price target on Alibaba to 140 from 130, which I think is super low, really, frankly, to tell you the truth. I think this is a very, very low one. And another very interesting thing that I was looking at, the best 3 retirement stocks for Gen Z investors. And you will see QQQ, which I definitely agree with. This is pretty much the NASDAQ, the large cap tech companies. And iShares Biotechnology, biotech is another one, which also looks like, of course, a riskier investment, but probably a smart one. And Alibaba. So we all within these ETFs and pretty much a basket of stocks, Alibaba comes through, and oversizable growth and a dead cheap stock price for Gen Z investors. Absolutely agree with that because it's one of my largest holdings as well. At the time of this article, the stock price was actually a little bit more than what it is right now, slightly more. And we have long talked about Alibaba's price, of course, and we have analyzed it through. It's pretty cheap, and we have examined the financials in detail. In case you haven't seen it before, I can take a little bit of a peek here. Take a look at the financials. We can do a little bit of a revenue growth calculation here and pretty much go through our DCF model. I will go fairly low here. I will go, let's just say 8, 10, and 12 in our revenue growth. And the margins that I'm going to use are going to be relatively low. Now, I'm not going to be using the very, very suppressed margins of last year for all of my projections here, because I really think that this was like the odd one out, much less margins than you would expect. I'm going to go a little bit higher here, maybe 9, 11, and 13, and this is still far from what they used to do. They could be suppressed a little bit, so we could try a little bit lower. I have done all sorts of projections and estimates in my previous videos, so you can find all sorts of these projections by taking a peek at these previous videos, or you can just do your own projections by visiting myinvestorsheaven.com and becoming a patron and basically do your projections for the stock. And now the free cash flow margin that we're going to be using is going to be maybe 90, 100, and 110. The company seems to be doing more than 100 for the most part. Annual return of 13% is what we want to be seeing. And if we hit calculate here, you will see that with these kinds of projections, with a very, very low revenue growth and a very, very low net income margin here, this is when we are getting to a medium which is 112. And of course, this has to do with the fact that we're going super low because of the last fiscal year results here, because of the very, very suppressed net income margin, for example, which was 7%, 7.3. Now, of course, typically speaking, you will probably get an even higher margin than this, and this is what I have calculated for in previous videos. So you, for instance, could expect something that's maybe near 17, 19, and 21 over here. And even at this kind of revenue growth, you can hit calculate, and you will see that we're well within green here. It really depends on, of course, what kind of estimates you are willing to go for. And during the pandemic season, remember, we had a suppression in terms of what Alibaba did. They still grew in terms of revenue, but they were very, very suppressed in terms of their net income. We have talked about it. This is not expected to keep happening, this kind of margin. This was more than likely a one-off. We have talked about it in detail. They have lost some money on investments, for example. And so this is why you're seeing lower net income and margins here. more than likely this is not going to be happening down the road in the next few years. And this is why going that low, it's a good exercise, but it's probably not realistic in terms of the margins. The margins are probably going to be around these levels, I would think. And so at these levels is basically what we have talked about in many videos of the past. And I firmly believe that about 200 is probably what the fair price of Alibaba would be right now, frankly. So thank you for watching the video. Please leave a like and subscribe if you're not a subscriber. And I'll see you in the next one, guys. Tell me what you think about Alibaba in the meantime. And I'll see you soon. Bye-bye.